channels for disruption of the global economy would be energy prices, and then a global risk-off scenario. We were last week, even ahead of these latest sanctions, we were looking at three scenarios, and one would be something a little bit like what markets have priced in last week, where you see, I think there were expectations of a relatively brief crisis that could see energy prices stabilize. But with these additional actions, I think we're looking more at our second scenario, which is more severe disruption. There's potential for disruption to the energy market. I think we've already seen some signs of uncertainty over supply, but to a limited degree. There's potential for disruption to the energy market. I think we've already seen some signs of uncertainty over supply, but to a limited degree. And I think in that scenario, we're looking at more inflationary pressure in Europe and the US. That doesn't necessarily mean that the economy is running off track, but it certainly raises the risk of a downturn in Europe. For the U.S., it's a little bit more removed, and so I think we're looking at still in that second scenario, we might still see Fed rate hike in March. The more extreme scenario is more disruption to energy markets.
It is really a complicated proposition because so many of your inputs need to change. You have perhaps a move to change the energy sector as a whole, remove their reliance. You have Germany and all of Europe potentially spending more on defense. How have those factors changed the longer-term economic outlook for you and the team when it comes to Europe?
Well, I think these are really longer-term questions, and I think that's going to be a little bit more slow moving. At the moment, events are moving very, very fast as we try to get a hold on what's happening.
So, gang, as you can see, as you can see, this is what's going on, with the Bank of Russia. If we've seen a key rate to 20%, so this is more of a long-term move. As we go into March, we'll see gold, going all the way up back up to take profit 1965 around that area. Again, we should see price heading back up to take profit 12 going into March. First, second, third, fourth. We should see gold heading back up going into this March. 2022. So this is the reason why what's going on with gold. And I'll keep y'all updated with news, gang. With fundamental news. Let you know what's going on overall as far as the news is concerned as well. But we see price at take profit 11 right now, and it's heading back down. We need a push above take profit 11, which is 1915, and going to take profit 13 back up to take profit 12, 1930 was just here. February 27th. It was just here. So we see a push above take profit 12 sometime in March 4th or next week. We're definitely going up to we can definitely get back up to 1945, take profit 13, and then eventually take profit 14, 1965. And I'll keep y'all updated again. We see a push above there. We can go up to 2000. As for buyers in U.S. like it was just talking about in the news. As U.S. is going to capitalize off of this, buyers are going to capitalize off of this move. That's what's going on. As Russia is increasing rates, with their banks. So we could see that means and that means it's good for us. We should see gold heading up to back up to take profit 14. And we're still in an uptrend, gang. We're still in an uptrend. So gang, this is why when we look at the news, we can see Western states remove selection from Russian banks SWIFT, while also freezing some of Russian central bank's assets. We also seen a higher gap, jumping all the way up to a high of 28. And we could see gold heading back up. This is the reason why we could see gold heading back up to take profit 14, 1974. Eventually we should see gold heading back up there. Let me see which one it was. This one right here. We should see gold heading back up here again. As next this starting March. In March as a likelihood of a 50% rate hike at a March of FOMC meetings have fallen 50%. 50 BPC BPS rate hike at March of FOM meeting had fallen to 4.6 from 24% a day ago. You know, and just keep that in mind as inflations could still be rising. We could still see inflation rising. We already seen the EFT maybe view as a bullish signal for prices to continue. And we could still see price heading all the way up to if we can get a breach, we can get technical gold prices attempting to breach a key resistance level of 1916, the previous high since May 2021. A successful attempt may intensify near-term buying pressure and open the door for further upside potential with an eye opening of 1960, and we can see price heading back up. The overall trend remains bullish. Overall trend remains bullish, meaning that buyers are still in control, as an indication by formations of consecutive higher highs and higher lows. And this will suggesting that bullish momentum is still dominating. And we can see, buyers are still dominating this market. Gang, buyers are still dominating this market. So gang, price is still in an uptrend. Candlesticks are still above this trend line. We have our trend line here. Candlesticks are still above this trend line, and we just need a push above as price is, fighting to get a push above take profit 11 right now, 1915. It's at 1915 right now. So we can see a close above 1915, and at 5 o'clock, Eastern time, and we're going to take profit 12, and then eventually back up to take profit, take profit 12, 1930. Eventually back up to take profit 13, 1945, and eventually up to 1965. We get a close above 1965, back up to take profit 14. Sometime in March. As this is a more of a long-term move, and I'll keep you updated with that gain as price. Is going to make higher highs and higher lows and higher highs and higher lows. And eventually make a higher high all the way up to 1965, and I'll keep you updated with that gain. And we're going to 2000. All right, so. I hope that helps again. I hope these videos helps, and I'll keep you updated. All right, gang.